U.S. market's going to open, and you're probably going to get some initial buying that'll be matched up with the selling from the guys front running from last night. So if the market is unchanged on the rest of the day in gold and silver, that's good. If the market's higher, that's obviously very good, but it also would probably smack of being overbought going into the number on Friday.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning. It's July 3rd. I'm Vince, and this is the Market Rundown. Today, we'll be looking at gold and silver markets as they are at a potentially crucial momentum level. Not Michael's. It's in front of Michael's. It's my little momentum level that might get us to Michael's. And we're going to look at a little bit of an update on mercantilism through the eyes of Indian air conditioning, looking at the major three powers that are going to be competing in a mercantilist world, those being Russia, China, and the US. And we'll look at some news as well. All right, so let's start with the markets. The dollar is down 3 at 105.63. 10 yields are 443.60, unchanged. S&P 500 is 55.09, up 6 handles. The VIX is 12.15, a little bit unchanged. Gold is up 16, close to its highs on the evening. The day at 23.45. Asian and European buying. Probably front-running U.S. buying. Doesn't mean we're going to go up in the U.S., but it does mean we're up. And there's buying across the globe. Silver leading the way at 30.16, up 64, up over 2 cents. Copper 449, up 6.8 cents. WTI down 35 cents, taking a break from its torrid rally at $83 and change. Natural gas 234, down 4 cents. Crypto not tracking precious metals at all. So this is not a safe haven type of thing, or maybe crypto is not a safe haven. At least it's not being looked at it like today. Bitcoin is 60,000 and change, down 1,800, down 3%. Ethereum down 32.94, down 121, down 3.5%. It doesn't look good. It looks like a breakdown for crypto. If you look at, see this gold chart, how it has this little formation. Is this a base to go higher or a distribution top to go lower? Well, it looks like it's a base to go higher. And Bitcoin, if you look at the Bitcoin chart, looks like that as well. And it might be a distribution top to go lower. I don't know. Grains are mixed, well, really up. Soy is 11.67, up 6 and change. Wheat is 5.83 on the bull side of unchanged, and corn is 3.98, down a very tiny bit. All right, let's start with the charts, okay? So there are levels, right? Michael Oliver's levels are a little bit above this market, call it in here. In gold and silver, we're through the silver level, I think. Well, just to go through our levels, right? The buyer is here, and he may still be here. The mini buyer was here. Now I moved this line. This line was here, identifying where the buying was. The buyer is no longer there, so I focused on the selling, keeping it down as opposed to the buying, keeping it up. So it's kind of like a dead area in here, right? We're above both of those areas now. Not only are we above those areas again, but we're above those areas, and the 50-day moving average is underneath us. Now, what's different? Well, here we are going down through the 50-day moving average, and it's flat. Here we are going up through the 50-day moving average, and it's flat. When a market goes through a 50-day moving average, or any moving average in general, you will get activity, obviously, right? But you will get more definitive activity when there's a slope. So if the 50-day moving average turns upward, as it looks like it's about to do in gold, it hasn't happened yet, you'll get probably even more buying coming into gold. So that upswing is like the final sign for a macro discretionary person to add to a position. All right, in silver, it'll be more obvious to you. In silver, we never really sloped downward, and now we've re-engaged an upwardly slope. And you can see that silver's overperforming. That's the extra buying coming into silver. Silver's levels were I didn't have the confidence in my levels as I did in gold, but I did know that this was significant, and it acted that way for some period of time. This happened to be the area that the silver buyer would come in on the back of the gold buyer. And we had the similar sell-offs, but now we're above so everybody, silver and gold are on the same page. Okay. So are they on the same page, higher or lower? Well, obviously higher right now. So we want to look at this as the pre-breakout, the warning before the Michael Oliver levels that we discussed yesterday. So I would say that this market, I did say yesterday, looking back at gold, I did say above here, we should go to there. And we're not there yet, but I think we're going to go there. And I'm guessing that Michael Oliver's levels are in this area more so. I don't have them in front of me right now. Anyway, so why is this significant? Why am I giving it so much attention? Well, it's because it's what I trade a lot. And second, we're going into a holiday. So people who have a decision to make it before holidays if they have to. And that is, I'm a buyer. Do I want to buy it before or after the holiday? Do I want to buy it before or after the number? And this is money coming into the market saying, I want to buy it before the holiday. I want to buy it before the number. Is that always mean we're going to rally after the number? No, it doesn't. But it means that the intrinsic interest in this market is not in protecting against losses. It's in adding to profits. And this market's a different market than it used to be. There you have it. Here, I'll let you look at silver again for a little bit of silver porn. Yeah, so there you have it. So let's it looks good, right? I mean, US market's going to open, and you're probably going to get some initial buying that'll be matched up with the selling from the guys front running from last night. So if the market is unchanged on the rest of the day in gold and silver, that's good. If the market's higher, that's obviously very good, but it also would probably smack of being overbought going into the number on Friday. If the market's lower today, then that means too many banks and traders front ran the interest. There is buying coming in the US. The question is it enough to handle the people that are long and want to sell? Who knows? Complicated behavioral stuff that I look at there. Anyway, let's get back to reality, or one version of reality. Mercantilism, Indian air conditioners. That's what we're going to talk about. Michael Oliver's mid-year gold and silver report. His numbers are in there. You'll have to click on that to find them. They're easy to see. TSL thinks there might be a Fed rate cut after Friday's number, which is a significant call. All right, mercantilism manifest. All right, so I talk about mercantilism a lot. I haven't updated people on it for a while, but it's happening. We're in it. End of story. So, but you have to check every so often. And I saw a post by someone on, I think it was Larry McDonald. He was talking about the Indian markets. He was talking about there's like 1 billion people in India without air conditioners. And I went, oh, who's going to sell them to them? That's what you ask yourself if you're in a mercantilist environment. And there are 3 countries that can sell them to them aside from India, which they're not going to be manufacturing complicated items anytime soon. And those 3 countries are China, the US, and Russia. And each one of these countries has an advantage and disadvantage aside from the geopolitics of it, just purely on the ability to make and sell air conditioners economically. All right, so China's pros. It has manufacturing excellence. It's the best manufacturer in the world. This is I'm just getting started on an idea here. Best manufacturing supply chain and value chain in the world. That's the bottom line. And they have close to the lowest labor in cost, right? Bad about China. They're a hothouse flower. They don't have enough. Their economy is not open enough to attract trust and investment. So in 5 years, they may not, I'm not saying it's going to happen, but in 5 years, they may not be number one anymore for other reasons. The USA, all right, what's good? Well, it's not our manufacturing. It's our global reserve currency, the dollar. Excuse me, the dollar protects us. and we attract foreign investment, and we are flexible economically, more flexible than China for sure. But China's on a very good path strategically. So bad, no planning, tactical overuse. We're investing in our own manufacturing base to try and catch up to China, but I don't know if the money's going to the right place. Do you? I don't trust the people that are allocating the money. I don't trust the people that are intermediating the money. And I don't trust the people using the money. I don't trust. Then you have Russia. Russia's good thing is it's now in a war economy footing. So the bombing in Ukraine is starting their manufacturing process, and they're making missiles and bombs. And that's good for their economy because the fallout of that is the USSR and the Russian economy, a wartime economy, creates manufacturing. Manufacturing eventually spills over into making other goods. And that's where Russia is. The bad part is it's small, it's isolated, and it's largely a dictatorial economy. And they are dependent on China for the financial aspect of it. All right. All three of these economies want to manufacture and sell air conditioners to Indians. Why is that important? Well, it's a good analogy. It's a good metaphor because in a mercantile environment, again, a mercantile environment, you need to sell more than you take in. You need to take in raw materials and you need to sell finished goods. The more advanced, the better. Too advanced, and people can't afford it. Not advanced enough, and your competitor is going to make them probably more cheaply. Air conditioners are a great example of a good that's advanced enough so that a growing middle class will want them, and not too advanced where they can't afford them. And Indians are a market that is going to open up. Markets need to open up markets need to open up for capitalism. Mercantilism hinders markets opening up. So who's in first place? China is. What are we doing to China? Well, I think we're working with Japan to damage the yen even more, which makes it hard for them. We have the dollar. The dollar yen is one of those things. Anyway, so mercantilism. Whoever gets their manufacturing up and running more competitively wins. So either you make them better like China does, lower cost, maybe it's better quality, depends on who you talk to, or you debase your currency like Japan is doing. The US is doing neither, which is why the US is going to have to weaken the dollar eventually and stop the war with Russia eventually. Anyway, just an idea. Here's some pictures to that effect. Indian air conditioner market usage by region, by application. Here's the country, 24%. So that adds up to about 1 billion people that don't have them. Doesn't mean they're all going to have them overnight, but a technological innovation that maybe uses a little more silver, right? But gets more efficiency out of it. See, that's like air conditioning is about efficiency and economics. So you're going to see more precious metals in them, I think. That was cars, and there's some pictures of some Indian air conditioners. And of course, from there, I immediately went to what about the precious metals in that? You will find platinum and other precious metals in thermocouples. Those are the wires in other areas, but there's primarily the wires going from the thermostat to the air conditioner because you need as little friction as possible thermodynamically, right? Platinum, palladium, silver, gold, all very important heat conductors or heat absorbers, right? And you'll find gold is contained in the circuit boards. So air conditioners are a good example of demand for precious metals and mercantilism. Moving on to MUFG Charts, Mitsubishi Financial. They have a nice chart package that I've attached here. I'll show you a couple pictures of it. And I did a markup of it. They accurately describe the world, and we throw some comments on there about why the world is the way it is. This is, believe it or not, what focus on Japan here. This is what financial repression looks like. The Japanese stock market overperforms. The Japanese currency underperforms. And when you have an economy that's on the cusp of actually having a potential hyperinflationary ramp, you want to look at these things. Okay, so for example, look at the dollar there. What's the dollar doing great against? It's doing great against the pound, Well, it's doing best against the yen, the real, the peso, and the Swiss franc. In general, economically, the dollar although this doesn't show it, it's actually kind of deceiving. The dollar is doing better against uh, G7 countries than against emerging markets. Now, although it looks like it's doing better against some emerging markets, that's a comment on the currency. The economies are doing better down there. Oil and gas prices notably higher in first half of 2024. Well, yeah, I mean, that's interesting. And it's also interesting because you haven't seen any headlines on it. You don't hear Biden talking about that anymore. And then you have silver, which is number one, and nobody's talking about it, not even this report. Love to see it. We're not at the top yet. U.S. Treasury yields widening in the first half of 2024. I comment on that. That's also, it's not financial repression, but it's going to create financial repression. Credit yields tighter. That means American government bonds are not as safe as they once were, and corporates are being treated better. It's kind of a bizarre thing there. A lot of investment grade bonds being issued, et cetera, et cetera, et cetera. And it goes through there, and I have those at the bottom with my comments in blue. Market news. He might be able to lower interest rates by the end of the summer, which is consistent with this. He may announce it in July, but the rate cut would come in the end of summer, September. And that's what this market is focusing on. And it looks like Stephen Blitz may be right. Generative AI is spilling into the classroom, and not just from students looking for shortcuts. Teachers are embracing new AI. Look, a year ago, I was teaching my students how to use it. They didn't even know about how to use it. And it's pretty scary. College MBA students are acting like old men. Anyway, and none of the teachers knew about it. And those that did know about it were sneaking about it. And I was being out in the open. Anyway, Tesla did better than people thought they would, or they did less bad than people thought they would. Apple is set to take an observer role on the board of OpenAI. So that's Apple and Microsoft and OpenAI, the woke ChatGPT product. That's going to be working with the NSA. Keep that in mind. General Motors is selling more cars. That's a good thing. Geopolitics, nothing crazy. Nothing crazy. It's all crazy, right? Okay, so today is the Fed minutes at 2 p.m. Tomorrow we're off. Happy Independence Day. And Friday is non-farm payrolls, employment rates, depending on how you look at it. So we'll be back on Friday. We'll be off tomorrow. Let's take another look. Yeah, so here we go. Silver is on the highs. Gold is near the highs. This moving average turns up, and you're going to attract more buying. If this moving average turns up and unemployment comes in high, more people are getting laid off, these markets are going to rocket. They're just going to, they're going to rocket. And gold will actually silver will do better, obviously. But gold will actually do better than you think, because the rate cuts might not take effect for a while. Anyway, the rate cut's going to come, right? The question is, have you wasted a lot of money speculating on that, or are you just going to wait for it to actually come? All right, I'm Vince. Have a great day. Have a great 4th of July.
Well, thanks for tuning into today's Markets and Metals with Vince Lanci. The show is brought to you each day by Miles Franklin Precious Metals, who we encourage you to consider for your next gold or silver purchase or sale. Miles Franklin has pricing that's among the best in the industry on most products, and Arcadia is proud to be a licensed Miles Franklin representative and happy to help whenever you have questions or want to place an order. Where this week's specials include 2024 Silver Eagles from the U.S. Mint for only $5.95 over spot, and 2024 1/10 ounce Gold Eagles for only $39 over melt. And of course, you can find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Happy to answer any questions you have, give you pricing on other products, and help you get set up with whatever you need. So thanks as always for tuning in, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.